Hey, this is Justin with DayTradeTheMarkets.com on Thursday, September 26th. And I wanted to look at the E-mini S&P today and look at what was essentially another day of consolidation inside of a bigger picture consolidation, and really zero in on just a few areas that I thought were especially interesting today. And again, using the context of the bigger picture can make that helpful. And just as a bit of a review, what we're looking with our software is we've got some real-time order flow data-driven evidence, pieces of evidence, especially these relative aggression bars and high velocity moves. And we've also got some real-time support resistance and a filter and deceleration indicators, divergence indicators as well. So we're looking at the real-time aggression and the order flow, kind of looking beneath the surface at what's really going on, like I said, under the surface of the market at the heart of the real-time auction. Those are giving us really good evidence in terms of the structure right now, or real time. We want to put that in the context of our bigger picture bias and bigger picture key levels, and I think that's really important to do, and I think that's a missing piece for a lot of traders as well. So in looking at today, we went into this market we're basically in a transition phase right now. We're in an area of neutrality or confusion, in that we have an area, big picture of support here, which we're remaining of a buying gap between basically 84.50 and 82. So that's an area of potential support, and then we're looking at this area around the 98 as potentially kind of a short-term barrier. And so we want to see how the market can react in this area between here. Can we break lower? Can we break higher? Or will we get rejected off of these areas when we test them? We also wanted to monitor this area around 94.75, which is where last Wednesday, when the Fed announcement came in, where the real strong buying initiated. So those are some areas that we wanted to watch and just see how the market acts at those levels, to see if we can get above this 98, or if we can get below this 82 area, then it becomes a lot more clear. In the meantime, in the meantime, before that were to happen, we need to be real careful and real nimble in our trading. So if we just kind of go through this a little bit piece by piece, you can see that our first major structure is what we call a level 3, or extreme buying aggression bar, and the low of that bar held nicely. The high was taken out, so it's telling us short term bulls are in control of this market. You wouldn't want to be fighting that. You wouldn't want to be short. We did, test this 94.75 area and bounced a 1.5 off of there, but then we busted through on another level 3 buying aggression bar. So at this point, what I'm thinking certainly is we're going to at least go test near this 98. I want to really see what's going on. Let's really see what happens there. Now, what we ended up happening, though, as soon as we got near that area, and this is a relatively rare thing, so it's pretty telltale, is we actually, on the high of the day, had a level 2 or strong selling aggression bar that came in, as well as a divergence and a deceleration. So that's telling us that this area, the price auctioned high enough, or advertised price high enough, to attract some pretty aggressive sellers. So that's our first sign to be a little bit careful. And at that point, what we're thinking is we want to really see, can the low of this level 3 extreme bar hold? So we want to look at this area here to see, can this area hold? Okay, and what ended up happening, which is a little bit rare as well, it didn't just grind down there or subtly come down to the low. We actually had a level 3 selling aggression bar right to that low. Now we bounced 2 points off of this low, okay, but in the meantime, that's setting up what we sometimes call a mini battle or a mini consolidation. We've got extreme buying on this side, extreme selling that's basically an inside bar to that range. So that's telling us we've got some consolidation. Whichever way we break out of this is pretty telltale for the rest of the day. So again, I just look at that. That's kind of the consolidation or the mini battle that we've got going on there. And you can see we have some level 2 selling that comes in here. Then we do break out of it on some level 3 or extreme selling. Okay, so this was really a key bar, this one right here, this level 3 extreme selling. We've got a high velocity move and another level 3 bit of extreme selling. So we sell off from, basically a 6-8 point move in a matter of minutes after we broke out of that consolidation. So the first kind of interesting area that we wanted to look at was an area of potential resistance, bigger picture, so context, where we actually saw some selling evidence come in off of the high of the day. Then we found this mini battle or consolidation and broke lower here on this level 3 selling aggression bar. So that's telling us at this point, at least short term, sellers have taken over. We wouldn't want to fight that. Now, the expectation would then be to go and test down to this 84.50 and possibly to this 82 level. Let's see how we react. But before we even get there, we start to get a little buying. You can see some extreme buying off the bottom, We have a little bit of a two-step there, and then we get some more buying, some more buying, some more buying. You can see that we've at least, it doesn't mean that this, wave of selling, it doesn't mean buyers have taken over. It just means this wave of selling has now become more two-sided. Okay, so now we're in a choppy market. You can see we tested up to the high of this high velocity move, right where these two level 3 bars, basically the zone in there, and we found some resistance in there. And then you can see that we sold off again. Here's another high velocity move made by sellers. Here's a buying attempt at buying that was rejected pretty quickly. Here's another attempt that was rejected pretty quickly. But what's interesting, I think, is when we made this new low right here, you can see that rather than the selling accelerating, we actually had a buying bar come in. You can see it's a green bar. So on the low of the day, rather than more selling aggression being attracted, there was actually some buying that came in. So it's a bit of a clue that this market's having a hard time. Now, I really thought when this next wave came in, we were going to make new lows, but the fact that that didn't happen, it decelerated, it didn't even make new lows, was telling us this market's having a hard time selling off. If the bears were really in control, they should be able to at least test down into this gap, and they couldn't do that. So we closed with a pretty bullish close here, and you could see some buying that came into the market here toward the end of the day. So again, just some really interesting areas on the high and low of the day within the context that we were looking potentially for support in this area, potentially for resistance in this area. So within that context, you can see we didn't bust out of there. I would expect with the consolidation we've had over the last few days that we're going to bust out one way or the other, and certainly the close here, we have to watch what happens overnight, but certainly the close, our expectation overnight would be we'd get some follow through higher. If that doesn't happen, then look for a move lower. If we do get some follow through overnight, that would be our expectation that we'll go up and test this 98 level and see if we can get above there. So just a little bit of a heads up and a little bit of I know I went through this kind of quickly, and you might not understand fully all the nuances that we teach, and I wouldn't expect you to, but just some of the ideas or the thought processes that we look at in terms of what is our expectation, or what are we thinking could happen in a certain area, and then what does the short-term real-time evidence tell us. And that can just help you stay a little bit more on the right side of the market, avoid a little bit more being on the wrong side of the market, so you can make better sense of what's going on, and obviously trade from a more of a safety or risk averse type of a place. So hopefully that makes sense, and if you have any questions about that, by all means please let us know, and we'll talk to you shortly. Thanks.